What's happening, y'all? I'm starting a new segment on how to invest your money, right? And this is literally me building a portfolio from scratch. You know what I'm saying? Starting from the ground up just to show y'all how to properly set up a portfolio to outbeat the S&P 500 to get maximal potential for your returns on your money in the stock market, right? So here's a look at my portfolio. This is what it looks like now. I got a very fractional, very small percentage of Bitcoin. Most of my holding is NVIDIA. If you on my Facebook or YouTube, y'all know I talk about NVIDIA a lot. And I also dollar cost average into the S&P 500. I got about a quarter of a share of the S&P 500. So with Bitcoin in the S&P 500, I dollar cost average into the S&P 500 and Bitcoin. And what dollar cost average is just basically at a set period of time with a set amount, you're investing no matter what. So if you look on the screen here, you can see that I have this amount of Bitcoin, I have this amount of S&P 500. You can see the returns and all of that on there. But when you dollar cost average, no matter if it's going up or going down, you're investing a set amount every 2 weeks. I invest $20 in the S&P 500, and every 2 weeks I invest $3 into Bitcoin, right? Bitcoin is my favorite cryptocurrency. It's the only cryptocurrency I invest in. The reason why I don't invest so much into it is because ideally, you get more return when you have more shares, right? So the S&P 500 is around $500, when Bitcoin is around $100,000, right? So if you invest $10,000 into the S&P 500 and $10,000 into Bitcoin, you just got a fraction of Bitcoin, but you have like 10, 20 shares, you know what I'm saying? 20, 30, 40 shares of the S&P 500. So even if Bitcoin is up 3% and the S&P is up 1.5%, you got 1.5% times 30 versus just a quarter of that 1%. So that's why I dollar cost average just so little into Bitcoin. I love the asset. It's already at 100,000. I don't think it's going to 1 million. But it's an asset worth going into. And as we go on, I'll go into more education about Bitcoin and why I like Bitcoin and so on and so forth. But let me get through the portfolio. So I got a very small fraction of Bitcoin, about a quarter of the S&P 500, and I got about 6 shares of NVIDIA, right? And what I did with NVIDIA, I scaled into it, right? So I bought my first 0.3 shares on May 2nd. Then on May 9th, I bought another 1.7 shares. You can see an example on the screen here. May 23rd, I bought 1.5 shares. And then May 27th, on the day that they reported earnings, I bought 0.8 shares. And the reason why I scaled in is because when you're buying for the long term, you don't know in a short period if the stock market may go down a little bit. And then if it goes down and you sitting on cash, you can lower the average of your investment. So I scaled in just in case NVIDIA was going to go down lower than when I initially bought it on May 2nd, right? And I bought it May 2nd at $115. I'll show y'all somewhere here. I think it's probably around 130 or something like that. So ideally, if I would have bought all of my shares at once at the 115, I would have had more profit than my portfolio would have been up more than it is now. But I did scale into it, so my average is a little higher. My average per share is a little higher than 115 versus if I would have bought all 6 shares at 115, my average would have been 115. So NVIDIA is my front runner. Like I tell y'all all the time, you gotta have a front runner in your portfolio. So while you're building out your portfolio and you find who your front runner is, now you gotta be looking, you know what I'm saying, for when it's time to buy your next position in the place. So you're only focusing on your front runner. I dollar cost average into the S&P 500. I dollar cost average into Bitcoin. But so that's on rotation. That's investing no matter what. But NVIDIA is everything else that I buy is going to be actively managed by myself. So NVIDIA, as far as actively managing, NVIDIA is the only thing that I have 6.25 shares, which since May 2nd, my investment is already up $78 just off of my money sitting there. I'm up $78 in a month, right? And it's a long-term investment, so this is going to build wealth. NVIDIA is my horse, right? And you can use ChatGPT to kind of find out who your horse is. NVIDIA is a more of a riskier growth stock. You know what I'm saying? Their sole thing is AI. If you want to go less risky, companies like Apple, companies like Microsoft, they have a more diverse way of making money, but they also have stockpiles of cash. Apple has so much cash on hand. It's a much safer growth asset. So NVIDIA is expected to grow a lot faster than companies like Apple, Amazon, and stuff like that. But they also will probably go down a lot more when the market is going down. So if you have a company like NVIDIA, it may not hurt to throw a couple shares of a safer investment in there like Apple or Amazon, you know, to stabilize your portfolio. I may consider doing that, but for now, my racehorse is NVIDIA because I'm betting on AI, and NVIDIA is the bet on AI. So like I told y'all before, to buy NVIDIA before May 27, the reason why I did that is because NVIDIA reported earnings. Every quarter, companies report earnings, and they basically go over what they made, you know, they go over what they made, what they project, whether it's, you know, issues with shipping to China because of tariffs or whatever, they kind of mention all of that stuff. And the market kind of moves. They could beat earnings or miss on earnings, but the market could kind of get emotional during earnings based off of, it could pick one thing out of the earnings call that the CEO mentioned, and the stock could tank or go up, whether they beat earnings or not. So buying based off of earnings is risky, and trading off of earnings is risky. But I did it anyway because I knew NVIDIA would beat expectations. They actually, as you can see on the chart, the dots on this picture is their earnings expectation. Every quarter, they expect their earnings to go higher and higher. But this last quarter, they expected it to be lower, and they still smacked earnings in the mouth where earnings were higher. I'm pretty sure tariffs was a reason for that. So next video, I'm going to go into, well, no, I'm going to keep the same motion on your horse, right? So we got to make sure you pick your horse. My favorite, NVIDIA, Amazon, Apple. I like Meta. I don't know if I like Meta too much for a horse. Meta is kind of another high risk investment, but for your horse, the main runner for your portfolio, I like Apple, I like Amazon, I like, as far as which one is the cheapest, as far as value wise, Google is probably the cheapest, but I like Google, Apple, Amazon, and Microsoft is probably the best. So when you're building out your portfolio, you want to take the main runner, right? Those names that I mentioned. And I'm going to go over how you can, in another video, I'll go over financials and how to know which one to pick and all of that. But for now, you could pick anyone if you're not sure and you want to, you know what I'm saying, wait for more videos. Don't worry. But you pick one of those and you build that out first, because technology grows the fastest. So if I was to wait for NVIDIA to post earnings, which I think the stock is like 130 something or high 120s. If I would have waited instead of starting to buy at 115, I'd have missed out on like $15 of the stock movement. So tech companies move the fastest. That's why I always say get you 8 to 10 shares of your favorite tech company first before even moving to another company. But while you're buying your tech company, you want to do some research, right? So I'm at about 6.27. So not at 8, not at 10 yet. So currently I'm only adding to NVIDIA until I get to at least 8 to 10 shares before I start diversifying my portfolio. Speaking of diversifying portfolio, I want to give some stocks that are on the lookout, stocks that are on a discount, right? And I was looking, and United Healthcare has taken a beating. Didn't really go over the financials, but I know that BlackRock has a big holding of United Healthcare. So I don't really consider stocks unless BlackRock owns it, has it in their portfolio, and BlackRock does own United Healthcare. So next video, I might talk about it a little more. I'm gonna look through their financials because I didn't look through them yet. But United Healthcare has made a significant drop. So if you're at that point where you already built out your main position in your portfolio, United Healthcare might be a good consideration. I'll take a screenshot of what the price is right now. So when we talk about it later, you can see the increase or decrease in United Healthcare. But United Healthcare is a stock that I kind of liked on this week because the stock has dropped so much. A lot of time news can drop a stock significantly. So if you're looking for a more defense play, remember, healthcare is something that people have to spend money on regardless, whether the economy is going up or down. So with United Healthcare, that will balance when your Amazon is going down. United Healthcare should go up, and that'll help balance your portfolio. But for right now, we're just building out the main stock in the portfolio. When you're looking for a main stock in the portfolio, it needs to dominate its industry. Google dominates search. Microsoft dominates desktop hardware and games. Apple dominates phone and phone accessories. Amazon dominates e-commerce. You know what I'm saying? It's the Walmart of it's probably the new Walmart, to be honest. But these companies dominate their industry. They hold 70, 80% of market share in their industry. So, of course, over time, companies kind of lose share over time. But if it already has 80, then you could think 10, 20 years down the line, because that's how long you plan on holding it, 10, 20 years down the line, even if it dropped down to 60, it still has a pretty good market share in that company. So while you're building out your portfolio, you can see that, you know what I'm saying, you want to, kind of pile up on your main stock first while your dollar cost averaging into the S&P 500. S&P 500, like I always say, is the safest investment. Warren Buffett recommends for most people to invest in the S&P 500. So if you want to average a 12%, you don't have to worry about picking any individual stocks. You dollar cost average into the S&P 500, which, like I said before, is a fixed amount of money at a certain time. It doesn't matter if the stock market goes up or down. Every Friday, $5. Every Friday, $10. Every Friday, $50. The more you put, the better, of course, but everybody's financial situation is different. So next video, we kind of, went over where my portfolio is so far now. Next video, I'm going to look at United Healthcare's financials next week. So that way we could really identify if it's a good buy or not. I'm also going to go over my next position, the next stock that I plan on adding, because I'm getting a little closer to that 8 to 10 shares for NVIDIA. So I'm going to go over the next stock that I plan on adding. I'm going to go over dividends, anything that anything that you need to know. If you turn on the news or Yahoo Finance, certain things that you can hear in conversations or see happening at your job to let you know when is the right time to buy right stocks and all of that. Don't worry, I got you. But as you follow me on my portfolio journey, not only are you going to see everything that I'm investing in, I'm going to teach you how to pick your own in case you disagree with one of the investments that I buy. I'm Mike the Money Motivator, man. Y'all make sure y'all like and subscribe.
Best thing to do if you want to invest for the long term is index. and it's the S&P 500 index.
Right.
And what's happened, of course, is that organizations like to grow. So they set up indexes on different industries, different countries. And as soon as you do that, you're violating basically what Jack Bogle said. He says you don't know enough to pick the right businesses, which means you don't know enough to pick the right countries.
We will see a time in which the Chinese economy is bigger than the U.S. economy.
The most, best